Good morning, everyone. It's Thursday, the 3rd of July. Happy 4th of July for all our U.S. clients. Good to be with you, Ben Buckner and Dan Basse, again, looking to discuss the grain markets on a very important weekend ahead. As we look back in history, this first weekend of July, being a 3-day weekend with the 4th happening on Friday, is always important. There's a lot of course, cross currents. We have weather, we have geopolitics, we have U.S. politics. Related to renewable diesel and a bill that's now looking in front of the House in 45Z. We have, rumors about U.S. and China, again, talking and maybe looking at some potential, I don't want to call it a trade deal because I don't think it is a trade deal, but looking at some potential opportunities that maybe China may be pushed to complete their prior phase one agreement back in 2020. So a lot on the table. The markets rallied strongly in the last 18 hours, yesterday and then overnight again. We are looking at higher prices here today. We did have an employment report, very strong data, 147,000 added to the workforce, well above normal. We are not seeing any slowdown in the U.S. economy, and that likely will support livestock markets in terms of looking at disposable income growth going forward. So with that in mind, Ben, I'll turn it over to you. Tell us what you think.
Yeah, a lot of things going on. And I think, as crazy as it sounds, one of the biggest risks to at least price discovery are the days the market is not open. So we do have a full 3 days where we can't digest a lot of things. That includes maybe the passing of a spending bill, whatever President Trump says to the rural community today in Iowa. And of course, we'll have many, many weather forecast updates over the next 3.5 days. So none of that can really be digested until Sunday night. So we think it could be a pretty explosive session one way or another. But I think there's a lot of new things to talk about this week, and that's includes trade deals along with like things we've highlighted, high crop ratings, pretty favorable weather. Things like we got something done with Vietnam, kind of sorting out the details there and what it means for U.S. ag trade is a little murkier, but I think on the margin it does boost the potential for things like corn exports. Vietnam's a pretty large corn importer, buys very little to nothing from the U.S., so that's positive. India as well. It seems like we're very close on a deal there. And while there's a lot of news talking about India buying maybe GM genetically modified products, again that's also pretty murky. But we do think this opens the market to DDGs from the U.S. and soybean meal. And those are the two markets I think we need an outlet for most. So again, all this leans, if anything, positive to future export disappearance. So we're kind of starting to see some trade deals, trade news filter in. That's something that we've been waiting on, and that's really, really important to find demand drivers for the market, because that's been something that's been absent. But things seem to be going in the right direction at least. So that's, I think, what's given the markets pause in terms of their break, especially when you think about just how short the speculative community is in markets like wheat and all exchanges and corn, of course. And those have been the markets performing the best the last 2 days. So it does seem like short covering for now. I guess we do want to keep in mind, I know kind of our outlooks have been, unfortunately grim, but we are just all about risk management at Ag Resource. And so we do have chart-based resistance just above the market. And before we begin this 3-day hiatus, where we'll have to think about a lot of news, this does kind of linger in the background, and maybe the recovery so far has been somewhat unremarkable. But we'll see if we can push above resistance in corn, which is about 440 a bushel, and in beans about 1080 or 1090. So those are key points to watch, I think, thinking about market sentiment as we get into today's session, especially into the close. So just keep that in mind, again, thinking about risk management. But at the same time, since we are all about managing risk for the ag industry, we've got to think about both sides. And so for a long time, and we've highlighted this, we are now keeping and publishing 2 sets of balance sheets for corn, wheat, and soybeans in the U.S. One assumes that there is no deal struck with China, and so political tension continues. China looks to markets elsewhere to sort its food import needs, and one that includes a deal with the United States, between the United States and China. And so China purposely buys U.S. agricultural products. So I think that's the only way to do this, is to kind of give you a framework for supply. And in corn, I think it's a little different than soybeans. And soybeans is the one market that would, I think, benefit most from a U.S.-Chinese at least successful negotiations, getting China to buy more U.S. specific products. So we, assuming China does buy more corn than is currently forecast, we still have U.S. corn in stocks, as you see here, about 1.8 billion bushels. We think it'll just be tough to get total U.S. corn exports much above 2.7. And the context for that is just this large Brazilian crop. The Brazilian crop, too, will be harvested, I think, pretty rapidly over the next 4 weeks. It's been pretty slow, There's not much corn in Brazil today, but we do think that in Mato Grosso, let's say, that they're going to harvest enough corn to surpass domestic market needs in the next 2 weeks. So that market should look different. But a lot of competition for feed demand. It's kind of one of our theses over the next 12 months. So in almost any scenario, the corn balance sheet does stay not terribly tight. That is our focus: cash markets and balance sheets. Chinese demand, of course, is welcome, but assuming maybe yields 182, 183, you're still left with something like 2 billion bushel in stock. So we want to keep that in mind as we see markets react pretty violently to headline news. Soybeans, though, if China does sort of purposely buy a lot more U.S. origin beans than is currently expected, we're kind of getting pretty close to pipeline minimum stock. So we've got, if there is not anything negotiated successfully with China stays absent from the U.S. market. I mean, you could drop soybean exports from the U.S. down, 1.5 billion bushels. Similar to corn, the framework for that is just large South American production. Most likely additional expansion in planted area in Brazil this year. So they come back in bulk next March, April, supplying the world with oilseeds and soybeans. But if China does come to the U.S. market in bulk, you got in stocks down to 225 million bushels. And so kind of a dichotomous market here, and we've got to know exactly what happens in terms of geopolitics and world trade to really be committed to a long-term soybean outlook. But also, like corn, I think we do have to contend with so far favorable weather could yield be up to 53 bushels an acre, and so that kind of complicates the entire thing. But it's the soybean market that a lot of unanswered questions. Weather, number one, we've got to get into the latter part of July before we know much about potential yield in the United States, and also demand. All these questions unanswered. Biofuel policy as well. So the soybean market is probably going to be the wider swinging of the three principal ag markets. Also, as we get into this 3-day weekend, we could see again many forecast changes possibly. But for now, we're just kind of watching drought be chipped away where it's most dire, and the region of the U.S. that's been the drag on yield performance the last 4 or 5 years. So here's the updated drought monitor. Not a lot of drought in place today, and where we see improvement over the last week, and that has been those areas of Nebraska, eastern South Dakota, and Iowa that have been so dry for so long. So you can see that drought is now almost completely absent from Iowa. And I think that's important, especially for corn, as we're kind of running out of runway to shift weather negatively and impact corn during pollination. And here's the forecast. I think we would like it to be cooler in the Great Lakes region. And of course, Canada will be watched pretty closely. Is it a developing hotspot? But I don't think you see a lot of extreme heat here. And especially for the next 5 or 6 days, it looks pretty mild, pretty temperate, and almost ideal for what corn will be pollinating during that period. On the right, you've got 7-day precip forecast. So kind of an abundance of rain outside of maybe Michigan and Ohio. 1 to 3 inches in a lot of places, including Nebraska, South Dakota, Minnesota, Iowa. So I think drought will probably be gone there completely by the second half of July. So like you mentioned, Dan, just lots of cross currents. We've got no trading for the next 3 days. And so again, I think digesting all of this Sunday night is going to be pretty important. Going to be explosive, but we'll just kind of see how things evolve.
No, good rundown, Ben. I totally agree. On the minds of all traders will be, of course, what happens in trade and what Trump says this evening, which will not be tradable, as you say, till Sunday night. But in the background, things look relatively good for weather. I agree with you. Maybe a little less heat in terms of the lakes, but overall, when you only got about 16% of the U.S. corn area in drought, it really says that we're looking at a very special growing season. So I think that's something I would highlight going home. But again, a lot of cross currents. We'll be back next week. We want to wish everybody a very happy July 4th. We do have a special. You can just look at that QR code there. And as we do every week, you got a chance at $1 seeing our specific recommendations. But for those not caught up with our advice, this is a chance to use this rally to get there. So that's where our mindset is here this morning. Be well, everyone. Have a happy 4th. Thanks again, Ben. We'll be back on Monday.
Bye-bye.